Hello and welcome to Closing Trades right here on ET Now with me, Asha Faridi, but Snehi Shah as well joining in on the show. And we're just about range bound once again. So that yesterday's weakness, of course, has got undone. And it's a more narrow band that you've traded in for the better part of today's trading session. Although trying to ebb higher, 73 points up in the green. But given that the global cues were supportive, it's a little lackluster today's trading session. And it's really been all about block deals. Look at ABFRL, that's down about 10.5%. There's been RVNL. That stock, of course, is a winner today. There's CESC, which is a winner. APL Apollo, Policy Bazaar, Titagarh for a third consecutive day on the trot. These are your winners in trade. And the breadth of the market, much unlike what the benchmarks are doing, is a lot more better and a lot more lively, with a count of about 155 standing to the advances within the F&O universe. When you talk about the large caps, it's Bharti once again that continues to show leadership, another 1.5% up in the green for that stock. Tata Motors after the Harrier EV launch and the management commentary thereafter, that stock looking good by about 2%. Blue chips like Reliance holding up nearly 1%. Geo Financials and Eternal are the other names which are also holding out. But Snehi, what about the newsmakers?
Well, lots of newsmakers today, and Asha, all eyes were on the block deals that have happened today. So you have a lot of counters that were in focus on the back of block deals. Take, for example, Alchem Labs was one of them. You have the stock trading under pressure. ABFRL also, all eyes on that stock because big cuts coming over there. ABFRL down about 10.5% right now. Alchem also lower by 2.5%. Another big newsmaker today is Sun Pharma, and Sun Pharma Advanced Research Company, which is Spark. Big cuts coming in on that stock in today's trading session because their drug that was under testing has not worked out with their eczema and skin drug. That has not worked out, and they're going to be shutting shop on those clinical trials. So on the back of that, very negative sentiment coming in. Sun Pharma trading with a slight negative bias, but it's Spark, which is Sun Pharma Advanced Research Company. That's the one that's actually to watch out for in today's trading session, because double-digit cuts is what we are seeing on that stock, almost 19% lower as we speak. A lot of other counters were too in focus today. Lots happening on the block deal front, but it's also some of these railway names that have once again seem to have found some steam. The likes of Ircon on the back of an auto win. Ircon is up 12.5% today. Railtel doing well. 11.5% gain coming in over there. Swiggy is another stock that's doing well. Defense names once again in focus. Garden Reach doing pretty well for itself. RVNL also doing very well, joined up there by right. So lots of stocks that are in focus today, and lots is buzzing. Even though the market is largely range bound, you have the broader end of the market, like Asha mentioned, that's holding up pretty firmly.
Oh yeah, absolutely. Let's now talk about the state of the economy. We've got Claudio Irigoyen, head of Global Economic Research at Bank of America Global Research, joining in on the show right now. Claudio, good to have you on the show. The biggest talk of the town, of course, has been US tariffs, right? How is it that you see this impacting global trade, macros, and of course, markets globally?
Global trade is being impacted. We are seeing a significant front-running of imports from the U.S. That has implications for the dynamics of inflation, because companies in the U.S. are building up stocks of imported goods, and that will give them the chance to smooth out the increase in prices, and obviously that will have implications for the dynamics of inflation and how the Federal Reserve is going to react into that. On top of that, countries are, as we all know, negotiating with the US, and depending on those negotiations, they will decide how to react in terms of monetary and fiscal stimulus. It will take some time for us to have a more clear picture of how the stimulus will play out, in particular in China, but we are seeing already some monetary stimulus taking place. So long story short, we had, since the beginning of this tariff saga started a couple of months ago, we have trim off 3/10 of the global forecasts or the forecast for global growth. Now we expect 2.8% global growth versus 3.1% before the start of the increase in tariffs. We are seeing a slowdown, but very contained, and we are not seeing necessarily a recession in the U.S.
Hi Claudio, this is Nehi also joining in. Help us understand what is your view on the US economy, because we have seen several rating agencies cutting their outlook for the US economy. Even OECD has said that Trump tariff will shrink the US economic growth to 1.6%. Help us understand, are we heading towards a slowdown? Can we expect a recession in the US anytime soon?
No, we are not having a recession call. We never had a recession call. We have been trying to be very careful in our updates of the growth forecast for the US and the rest of the world. We try not to overreact to headlines. What we are having is a slowdown in economic activity. Our average growth forecast for this year is 1.5%. And if you calculate the growth numbers fourth quarter versus fourth quarter, it would be 1%. The number comparable to the OECD number is 1.5%. They have 1.6%, so it's roughly the same view of a slowdown, but not necessarily a recession. We see consumption holding pretty well, the labor market also holding pretty well. The US economy is fundamentally a service economy. Manufacturing represents only 8% of total employment. So we think that as long as middle and higher income brackets keeps robust consumption dynamics, given that the balance sheet of the private sector is pretty robust, we see the slowdown, but not necessarily a recession.
Right. Claudio, how does the broader environment of rising developed market yields, especially in the US and Japan, impact the global flows?
Well, that is obviously another headwind. As we all know, most of the countries over the last few years implemented fiscal policy under the broad assumption that interest rate would remain very, very low. We had a massive drop in interest rates at the global level since the 2008 crisis. But since the pandemic, we had an increase in interest rates. It's most likely that we are not going to go back to the very low level of interest rates that we had post 2008. And in this new regime, obviously, fiscal dynamics that were sustainable over time might not become or might become not necessarily sustainable in the future. So this is something that obviously impacts on global growth. This is something that we have been incorporated in our new global growth forecast and the forecast for the US and for the rest of the world. And it remains to be seen how yields continue reacting as we see the fiscal bill being approved in the US. I think it's an important development in the coming weeks, and it's also linked to the tariff theme, because part of the negotiations in Congress has to do with convincing the fiscal hawks in Congress that there will be enough revenues coming from tariffs in order to compensate for the drop in revenues associated with lower taxes.
Okay, point taken, Claudio, but also share with us your views on the US tax bills. We've seen some conflicting news coming in. What is your stand on that? The
discussion in Congress, it's concentrated now in the Senate. The House already approved a bill that probably will face some pushback on the Senate on some of the spending cuts, and we think that the final bill that will be approved will imply a primary deficit of around 3.5 points of GDP, which, if you add the interest bill, it will amount to close to 7 points of GDP, which is a sizable number for an economy that has been running close to potential up until a couple of quarters ago. So that is sort of behind the price action that we have been observing in the long end of the curve, 10 and 30 years. And if that bill is materialized and the fiscal deficit that I just mentioned it's confirmed probably we are going to see some further pressure in the long end of the curve in the US.
Right. Claudio, so do you see money moving out of the US because of the dollar weakening? And also, how much of an impact do you see of the weak dollar favoring emerging markets like India?
We are seeing some rebalancing away from the US into other markets like Europe and emerging markets, ex-China. What we need to understand is that before the tariff shock and the uncertainty shock, the global portfolios were highly biased towards exposure to US assets. They were mostly overweight US, underweight Europe, and underweight emerging markets. We are seeing now a rebalancing, not necessarily a fire sale of US assets, just a rebalancing away from the US into Europe and emerging markets to rebalance the portfolios towards more neutral levels. And that is enough to explain the weakness of the dollar that we've been observing and why emerging market currencies are trading relatively well. That is explaining why, despite the fact that the Fed is not cutting interest rates, and by the way, we've been having this out of consensus call that the Fed will not cut interest rate this year. That explains why some emerging market central banks can cut interest rates despite the fact that the Fed is not cutting, and it has to do with the fact that the currencies are trading well as the market moves away from the dollar into euro and emerging market currencies. The move was probably more concentrated in other developed currencies rather than emerging markets. There are still concerns that the global slowdown could impact emerging economies, and therefore there is not that much conviction that emerging market is a great risk-reward proposition. We like emerging markets. We think that the emerging market might benefit in the coming months.
Okay, but Claudio, you said that the Fed will not be cutting rates anytime soon, but what are your expectations of interest rates in India? How much cut do you expect in the June policy, which is days away from it now? And as well as overall calendar year 2025, where do you see India's monetary policy headed?
We have two more cuts. Our India economist Rahul Bahoria, which is responsible for the macro forecast for India, expects two more cuts of the RBI to a terminal rate of 5.5. Having said that, even for an economy like India that might benefit from relocation of supply chains and relocation of flows away from the US, we need to understand that things are very, very fluid in the US, and with negotiations on China and Europe in particular. So the landscape today is quite more benign than compared to a month ago. Clearly the rhetoric has softened significantly, so we cannot rule out a different environment a month or 2 months or 3 months from now. So uncertainty remains high, and I think central banks in emerging markets needs to take that into account and move carefully. But in the current environment, even though the Fed might not cut interest rates this year, or at least that's the view that we have, as long as the dollar continues weakening or at least not strengthening from here, there is more room for central banks in emerging markets to continue cutting. India, it's one of them.
Right. And how are investors looking towards India?
India is a very interesting proposition. It's a country that has been running for many years at very high rates. We expect 6.3% for this year, but any rates of growth between 6 and and 7% implies a very important rate of growth in per capita terms. You don't have many countries with these dynamics in emerging markets. And given that India has been gradually opening up the capital account, it's easier to invest in India if you compare investment decisions today versus 5 years ago, 10 years ago. And from a geopolitical perspective, India is suffering as long as India continue doing the homework of investing in infrastructure or offer very interesting alternatives for companies to redirect supply chains towards India. So I think within the emerging market context, investors are always looking at India as a very attractive proposition.
Okay, Claudio, thanks so much for joining us. On that note, we'll let you go.